Hello traders, Gary Wagner here. It is about quarter after 12 in Honolulu, quarter after 6 in New York currently. 4th day of April, Wednesday, and this is the daily report for gold and silver. We are into the afternoon session now, in which we have nominally higher prices, but for the day session itself, we had another day where the market traded off sharply, actually hitting an 11-week low. In terms of the marketplace itself, it was down at one point $28 to $30, and spot gold was quoted at $16.17. That was where I believe we saw settlement. The low on cash, according to Kitco, $16.12. Currently, $16.2370 up to $30. $31.50 up 4 cents in silver. Silver, of course, was lower, down to $31.23 in the morning session, and has been moving back up. Now, in terms of where this market is headed, short-term as well as long-term, there's no doubt we have some real bearish momentum that has entered the market. Now, this is coming on the heels of minutes that were released of last month's FOMC meeting. And in essence, what that FOMC meeting said was that the U.S. economy right now is in fact improving, and they're expecting 2% overall improvements per year in the economy right now. Because of that, the likelihood that there's going to be further quantitative easing from the central banks, the U.S. central banks, isn't as probable as it was alluded to, I should say, in the lecture series that Bernanke gave last month. So you've had this really push-pull in the marketplace, and really what you're seeing with that push-pull is a division amongst the central bankers. However, one thing has to really remain clear, and that is that if the economy in the United States is in fact improving, there wouldn't really be as much of a need for quantitative easing. There would be a need to keep the interest rates low, but not so much to increase the money supply itself. So traders, with all of this fundamental news that is now entering the market, on a technical basis, really what are we looking at? And the first chart that we'll take a look at is going to be our 420-minute cash market, the 61% retracement level. That's the retracement level from the beginning of the rally, which started in December. This big long rally pushes the market almost 1800. That 61% retracement level comes to the point that we are currently at. When we take a look at this marketplace itself, 1622, that's that critical area. That's why I said to place stops below that area. Depending on where you've placed the stop, you could in fact be in the market or stopped out. As a rule of thumb, I like to give it at least a 1%, call it a wiggle room. In gold, that would make it about $16 below. So if you were working with that, you're still currently trading in the market. Position, of course, is off. Average buy-in price is around $16.50. It is very tenuous. And when I say tenuous because it has not broken hard through the area, and in the same way, it's not yet given us a concrete example that it's finding support in this area. Whether it finds support in this area, to me, is really critical, because the next real major level of support runs down at 1582. That's the 76% retracement area. Do I think the market could go that low? It could. Do I think the market will go that low? At this point, with the information available to me, I have to say no. So traders, what is the best strategy at this point? Now, first of all, in regards to silver position, we're currently sitting long, and it did not come close to our stop. Recommendation is to maintain the position that we have. In gold, for those that use that 1% rule, stop didn't get hit, maintain that long position. For those that did in fact get stopped out, should we find that this market does find support in this area and it becomes again this one bottom, because this is right in the area where we're looking for support, right at around 1623 as I showed you on the last chart, this would be a point where you'd want to re-enter. We will wait to see if we get confirmation of that. We are getting the market, whether it just be short covering or bargain hunting, but we are seeing that market move back up. When we go ahead and convert that, for example, to a daily chart, you can see it not as extreme or intense of a move, but we have a little bit of an uptick from these lows that we had right around 1613. So traders, what would the final word be? Well, I have to look at it in this way. Just as this market was moving back up, our critical area that it really needed to breach roughly around 1691 to overcome this top, that was critical. Didn't take it out, market went lower, but that was a critical area. In the same way, this 1624 to 1622, this is absolutely a critical area. So that whether it finds support and this becomes a floor, or this becomes an area of resistance, meaning the market continues lower and this becomes a ceiling, those are going to cause two different strategies, and we would have to, of course, then act accordingly. But there is not enough data in right now by the virtue that it has come off those lows and is trading back at that support level. We'll have to see how the market reacts over the next couple of days. This has been Gary Wagner, wishing you as always good trading. We'll talk to you tomorrow for another daily update and review. Bye-bye.